As the initial wave of AI software hype settles, market volume is beginning to price the specific physical requirements of the data center. While retail headlines focus on the volatility of a few mega-cap names, institutional capital is moving into the underlying infrastructure stack, specifically memory, server architecture, and power. Yesterday, Micron reported financial results that exceeded analyst consensus on both revenue and guidance, specifically citing an acceleration in AI-driven demand. This data from Micron confirms that hyperscaler capital expenditure is not just holding steady, but flowing directly into the components required to scale large language models. This creates a dilemma for those holding crowded, pure-play GPU stocks. If the bottleneck has moved, your capital allocation might be focused on the wrong layer of the build-out. Real-world AI scaling now relies on three distinct physical layers: the memory that feeds the models, the dense servers that house them, and the power systems that keep the lights on. This chart shows how these infrastructure pockets are performing relative to the broader tech market. While the QQQ has steadied after recent pullbacks, names like MU, SMCI, and VRT are showing relative strength and volume support. Ignoring these physical data center constraints may leave a portfolio exposed to the narrative of AI without being positioned for its actual construction. The first physical constraint in the data center pipeline is the memory required to handle massive datasets. High bandwidth memory, or HBM, is the specific component that allows GPUs to function at scale. Without it, the processor's speed is limited by how quickly it can access information. Micron is currently a primary beneficiary of this demand, providing the fast DRAM and HBM chips that are a clear bottleneck for AI training. This diagram shows the data flow. The memory node is a significant choke point where initial friction and revenue concentrate. Upside is captured in confirmed revenue beats as hyperscalers secure memory early, but the trade-off is the semiconductor cycle. Memory prices are historically sensitive to supply gluts, risking rapid price reversals if the build-out falters. Buying MU is a bet on verified infrastructure demand, but it requires an acceptance of the cyclical risks inherent in hardware manufacturing. After the components are produced, the next constraint is the physical architecture required to house thousands of chips. This is the rack scale bottleneck. Deploying massive AI workloads requires specialized liquid-cooled server systems that can handle extreme density. Supermicrocomputer functions as the pick-and-shovel provider here, assembling raw silicon into the integrated racks that hyperscalers actually deploy. Following the pipeline, the next value point is the server rack. As the mini chart indicates, SMCI captures significant momentum with higher price volatility. Upside remains high as order momentum continues, particularly through partnerships like NVIDIA's Rubin. The trade-off is susceptibility to non-operational news. Governance or audit headlines can cause sudden pullbacks. For those with a high tolerance for volatility, SMCI offers a direct play on the speed of data center deployment. The final physical constraint is the industrial infrastructure required to support the server racks from the outside. High-density AI clusters require unprecedented amounts of electricity and complex thermal management to prevent hardware failure. Vertiv Holdings provides the power management and cooling solutions that address these environmental constraints. At the end of our build-out pipeline sits the power grid. Vertiv shows steady institutional volume. You cannot turn on a server without power. The upside is a long-term order backlog, making demand more predictable. The primary risk is a macroeconomic slowdown. If tech giants reduce capital expenditures, Vertiv's infrastructure projects are deferred. VRT represents a utility-like growth play within the AI trade, assuming data center expansion continues at its current pace. The next phase of the AI market will likely be defined by these physical bottlenecks rather than software features. To decide which layer fits your strategy, we can map these stocks onto a matrix of risk versus time. Active traders focused on momentum and earnings catalysts will find Micron and Supermicro in the high volatility, shorter-term quadrant. This profile requires strict attention to technical levels. If the price fails to hold recent highs on volume, the trade is invalidated. Fundamental allocators may prefer Vertiv or other power infrastructure names, which sit in the longer-term, lower volatility quadrant. Here, the goal is to manage position sizing to withstand macro fluctuations while waiting for the multi-year data center build-out to mature. By focusing on the constraints of the system, you are positioning for the fundamental growth of the industry's backbone. However, caution is necessary. sector valuations remain at the higher end of historical ranges. Any significant reduction in tech spending could lead to sharp, high-volume reversals across the group. Smart capital is flowing toward memory, servers, and power. If you want a straightforward look at where the AI infrastructure trade is moving next, subscribe and turn on notifications. Leave a comment with the stocks you're tracking. This is market analysis for education and entertainment, not financial advice. Always do your own research. See you in the next one.